Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. I'm your host, Bchek. I'm joined by my legendary co-hosts, Legendary and Sammy, in the co-host seats. We're going to get into everything that's been going on in the NFT and crypto market in the last 24 hours. But before we do that, just as a reminder, as always, that nothing that we say here is financial advice, because the modern market is exceptionally risky and we don't know almost anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Wednesday. It is the 24th of April. How are you doing? How are you feeling?
GM, I am pumped for today's spaces. We have an interesting conversation. It's going to be a bit more technical, probably. A lot of things that need to be explained around Renzo, depegging, risks of restaking. Super stoked. We also have Brad with us for that part of the show. And I like it because I have quite a few thoughts on it. And I think it's also interesting from the perspective that we've been talking theoretically about some of the risks around restaking, but we never had like any kind of incident yet. So it's good to have that as the topic of today's show.
I agree. And I think that what would be interesting to do is reflect, as all of us, as people who are restaking, and being like, well, where do we place this type of risk on the scale of risks? Is this one of the main risks? Does this type of risk manifesting in some way have any real impact on us and the decisions that we choose to make? Still taking into account that very first message that this is not financial advice. We're just like navigating the situation as everyone is in real time too. So that'll be an interesting conversation to have. And as usual, we'll get into all the usual stuff as well. Sammy, how are you doing? How are you feeling? Seems like you're getting Legendary to chuckle from the private chat. How's that little competition going that you've got going on?
I think I'm ahead. I think, but especially today, but yesterday as well. I think I was ahead by 1 or something. So yeah, we got that competition going very well. But yeah, I completely agree. Like the Renzo stuff, I'm kind of glad that I kind of slept through it and woke up this morning to it being repegged. But yeah, it's definitely something that we want to touch on and dig into.
Yeah. Okay. I think that is important. Legendary going to do the full breakdown for all of that stuff in just a little bit. So stay tuned for that. But before we get there, let's get into all of the headlines for the day and some price action and the general updates. So let's do it. As always, this comes to you from the snapshot, which is pinned up top. If you do find it brings you some values today, please do give it a like. So price action, we've got Bitcoin at 66.5K, up a percent. We've got ETH at 3.2K, Solana at 157, fairly flat there. First headline of the day is a $3.5 billion restaking protocol, Renzo, depegs due to airdrop dissatisfaction. We're going to break it down in a bit more detail, but in essence, you had the season 1 points campaign being campaign that started in January, has seen immense growth. $3.5 billion were deposited since December the 18th, and they kind of revealed their airdrop numbers, so their airdrop details. And people were not happy, and it seemed like a lot of people were selling their ezETH, which is what the ticker was. But we'll get into more of that in just a little bit. Actually, we'll do it like that. Number 2, Chromie Squiggles, 16 sweep by a fund, sends the floor 7.2 ETH. We'll speak a little bit about these kind of major ETH NFTs and if there could be a rotation to those assets. And finally, SocialFi app Fantasy Top on Blast reaches a $30 million TVL before it launches on mainnet. As always is the case with these Blast applications, it's got something to do with gold, potentially. The app with the second highest gold distribution on Blast launches in a few days. It's a gamified social app. Hope we will get time to touch on that and kind of discuss why, in Cyrus's opinion, it's actually better than Frentech. Getting into some floor prices around the space, we've got CryptoPunks at 38, ETH, Bored Apes at 12.7, Mutants at 2.2, DGods at 1.6, Captains at 3.3, down a few percent, Azuki's at 4, Penguins at 11.1, Mad Lads down some more percent to 94 Solana, and Noun's winning bid was at 7.2 ETH. We had Tyler Hobbs for Denza selling for 33 ETH. Sounds low in ETH, but still over $100,000. And Xcopy Rabble selling for 17 ETH. Those are two notable sales from my perspective from the last 24 hours. That is the headlines. That is the price action. Legendary, as always, we're going to get to the rest of the news a little bit later in the show. We're going to get into all the headlines. But before we get there, anything else catching your attention from the market at the moment?
There's been two things I've been looking at, one of which being DGods. Was curious to see if they managed to maintain or sustain the pump that they experienced yesterday, and they did. They are only down 1% over the last 24 hours, so essentially the same, and have still that 1.6 ETH floor price tag applied to them. And the other one, a collection I haven't seen in a long time, ETH Lizards, suddenly being up almost 20% over the last 24 hours.
Do you have any perspective on the ETH Lizards pump?
I've been to their official X account, and there's been apparently a Spaces yesterday that was titled around Web3 brand acquisition. So I don't know if there's like any rumors of the project being sold or them buying something. So I can't comment on that. But at least that was the title of the last Spaces that they had yesterday. Interesting.
Okay. Yeah, we're just looking at the Mintify heat map, our NFT marketplace partner. And yeah, as you can see, ETH is up 17.7%. Interesting to note, yeah, DGods staying the same as yesterday after the pump they experienced, up 20% from the day before last. And what else can we see? Sammy, anything else catching your attention here?
It's a Cool Man's Universe. That's a name that I haven't seen in a while. They did announce a token, the Cool token, back on the 16th of April. So I'm assuming this is probably a sell the news event where it's kind of dropped a little bit after.
Interesting. Okay.
And then outside of that, Sam NFT Stats, his photography blaster NFT is minting on Blast as well, which is interesting.
Ooh, that's pretty fun. That's pretty cool. Definitely want to keep an eye on that. I wanted to ask. Okay, you mentioned the token for Cool Man's Universe, which has been announced. Huge price change after that. Legendary, before we get into the main headlines today, just wanted a little bit of a reset to kind of discuss the relentless push for tokens at the moment across the board with various projects. We've spoken about it before. Has your position changed much? I know we kind of discussed last time that we don't necessarily think that the market can absorb all of these tokens in one go. We've obviously spoken as well from an angel and KOL round perspective that the deals are getting, like the valuations are getting higher. There's not as much meat on the bone for the deals for the investor. What's your reflection at the moment as it relates to like NFTs that are launching tokens?
First of all, it hurts to see the Cool Mans. Remember that I spent more than 1.5 ETH, 1.8 ETH per every single Cool Man that I had. Second of all, as you said, the KOL round token raising competition is very fierce. I do feel that the terms are getting better now, though, because some projects start to realize that KOLs get a shit ton of offers, VCs get a shit ton of offers a day, and now you need to actually stand out with good terms again, and can't just put up ridiculously high FTV numbers to everything. I do still think that the market cannot absorb all of those tokens, and it's only getting more and more from here. It seems like every single narrative that we have right now, whether that's restaking, ordinals, runes, gaming, AI, everything is channeled into a token. And that obviously creates a massive, massive oversupply. And even the thing that kind of exacerbates that is that with runes, where you have like a lot of friction, you then also have like the only short-term real bull case for them being listed on a centralized exchange. So even that competition and fight for centralized exchange listings is increasing. But I do still think that while all of that is true, that token plays, obviously, whether that's airdrops or certain games, whatever it is that you have like a strong thesis on, are still among the best plays that you can make.
Interesting. I'm kind of leaning in a different direction to you now, Legendary, to the extent that you think that they're still useful plays. And I'm not saying that they're not useful plays. I definitely feel that I almost think that if you were just trading sentiment, you know how sometimes when everyone is saying something and everyone is trying to get into something, that's usually the time when it's not the time to be in. And I'm starting to feel like people think that there's such home runs that I'm very, very close to basically just saying no to everything now. I don't want to completely close the door because maybe, as you said, there's still the opportunity for the right thing to hit in the right way. But having said that, I'm starting to think that the window of opportunity is getting way smaller. If not, I might just shut it. Might just shut it completely. Want to give you a chance to come back on that, Legendary. Want to hear Sammy's thoughts. Oxy, your hand was raised, and would love to bring Brett into this conversation as well.
Yeah, I agreed with you to the extent that I definitely changed my investing strategy, and now you actually need to look at some of the deals and do find the good ones. But I disagree with the part that it's basically almost time to shut the door, because I think there are like a couple of short-term plays that have TGEs that are very, very close, that have still generous unlocks at TGE, that just make a lot of sense to do. And it's also personally something that I always feel more comfortable with than, I don't know, meme coin trading or other things to do. And the risk-free way, obviously, of doing that is the airdrop farming side of things.
Yeah, that's true. I mean, I guess to always continue the airdrop side is pretty helpful. Sammy, what's your take here when it comes to well, two things. When it comes to tokens, like holding the NFT collection as a holder, because many people will be in the position where they're holding the token as a holder, expecting something to come. And then second, as an investor, like, is your outlook changing?
I think it depends on your own personal circumstances, whether you've got a short-term view or long-term view with that particular investment. So if you've got a short-term view, you're going to be looking at more favorable unlocks earlier on, shorter vesting schedules. But if you like a business for its long-term prospects, then I think that you could potentially look for those less favorable plays. Like I use Mockaverse as an example, that's a longer vesting schedule. But I think what they're building long-term, and they have a significant amount of capital, that's a very different prospect to like Cool Man's universe, I'm assuming, because I think that I can't really work out what specifically what would be the use case of the token. I think there's a lot of projects now that are launching the token for the sake of launching the token, just because it's in that meta. So I'd just be like very, very wary about why they're launching it. So it's
Okay.
higher risk, just be more selective. Can you hear me? Okay?
I like that take, but I'm just checking, is your audio okay? Like, could you hear everything Sammy said okay, Legendary? Just say something, because I think with
Absolutely.
my audio...
He's
Okay,
robotic.
can you hear me?
I can hear you. You can you can all hear each other fine. When you guys talk, something is going wrong in my audio, but as long as it's fine for the audience, that is completely fine.
Here's robotic for us as well in the audience.
Oh, was it? Okay, Legendary, how about you?
I still can hear you.
No, okay, so something's going wrong with your audios. Bread, was it bad when Legendary spoke as well?
Yep. Yeah.
Yeah. Okay, is it fine when I speak?
You sound clear.
God damn it, what's going on? I don't know, guys. Do you want to just try and drop us down from the video and see if you come back, and then maybe it'll be okay. Let's see. Okay, so my audio is okay. That's fine. Bread, let's go to you. on that same topic of conversation, we're talking about token unlocks, whether you're an NFT holder expecting something from the team that you're holding, or as an investor. Have you noticed a difference in the market? Are you approaching things differently? What's your kind of perspective on that at the moment?
Yeah, I mean, it's kind of and excuse me, I'm making breakfast and cooking while I cook. But I mean, it's the tale as old as time, right? Like it's, a token is nothing without a product or without something it actually ties to. That's what Sammy was getting into a little bit there, where, you have Mochaverse, you have like Tensorians, you have these things that, like, it's not an NFT collection, right? It's a product that happens to have an NFT. Same with Meme Land, right? And like the token therefore has value because of that. So like, yes, launch the tokens now if you're going to do it for a lot of these projects, just because you have to have demand and it's token season, like go for it. But like long-term sustainability, like you're going to see the constant rotation. There's mercenary capital all over the place this time of year, because farming is the name of the game right now.
Okay, so yeah, we'll speak a little bit more about that mercenary capital maybe when we're talking about staking stuff. Just a quick check-in before we go to Funky, who has his hand raised. Sammy, do you want to just check the audio when you say something? Testing.
Sorry, I'm navigating two screens. Yeah, I think, is that
okay?
better?
No, it's not. It's not working. Legendary, I guess it's the same with you.
Yeah, I'm gonna jump over to the phone and speak from the phone probably.
Yeah, okay. So I'll stay on video. It's just gonna be me. And you guys, I think if your audio comes from just the phone, it will be okay because it's working for everyone else. Apologies for the technical issues, guys. Funky, keep us moving here. What are your thoughts on the conversation on the tokens? What are your thoughts here, my friend?
Jim, everybody, I think you bring up a lot of great points about now we're having to be much more judicious with whatever capital we deploy. Like I'm seeing this from the kingdom, right? This is all this deal flow coming in. And sometimes you just look at it and you're like, how many AI tokens or projects are launching? Like you just kind of scratch your head and is it worth throwing money into? And I'm now at a point where I'm just doing short-term things where I think, okay, 25% TGE, it's going to happen in July. I could probably take back my initial and just ride out the rest and see where it goes. But yeah, I think there's just an overwhelming amount of projects launching. So I can see why you guys have to always be careful and discerning about what am I going to get into? What's my play here? Is this a short-term thing? I'm just going to make a quick flip, or is it something that I'm going to hold for long-term? So yeah, it's just really, we're at a saturation point. I think you guys are right, spot on.
Thanks for that, Funky. I think that's helpful. One of the key things in my mind, which I'm thinking about, is, look, I know people talk about FTV being a meme and it doesn't really matter and whatever, but I am wondering that there are all kinds of new protocols this time around. Like, for example, NFT lending, something we speak about a lot, given that we run an NFT market show. But like in the previous cycle, there were no such protocols. There were barely any NFT marketplaces. So obviously there were no NFT marketplaces. There was no NFT lending. So it's like a new protocol. So that means that there's, it's in competition for liquidity from everything else. But B, there's no real precedent from the market to decide, like, okay, how much should an NFT lending protocol be worth? And so there's just a variety, and just think of how the market has developed over the last few years. There's a variety of protocols that are in that situation, where it's just like, it's a new thing coming to market, which never existed before. And so it's in competition with everything else, but B, we just don't know how much the market is going to value it. And so that's something I've been thinking when it comes to this new stuff, where it's like, okay, I know people say FTV is a meme and on some level it could go really high, but at the same time, there's no precedence here. There's like no precedent, and therefore a reasonable amount of risk for people to say like, well, do you know what, that specific new niche type of protocol, it's not a DEX, it's not an NFT marketplace, it's not like one of these core infrastructure, it's not a new chain which automatically moons and goes to 1 billion FTV anyway. Like, it's a new niche thing, therefore it's much harder to value. So I think we've got into a habit of just assuming a really high FTV for literally anything. And actually there are certain types of categories that can reach that kind of FTB as a meme kind of valuation. Legendary, want to give you a chance to just reflect on that, and then want to move the conversation forward into these headlines. I think Brett's got something to say as well, but Legendary, want to give you a chance to reflect first.
I hope audio is working now. Wonderful, because I can't hear you on my phone, so I need to unmute my laptop when you're speaking, because otherwise I can't hear you. It's one of those days, and I can't hear your replies. You need to give me like 2 seconds to mute here and unmute then again. I generally do agree. I think it's hard with new categories, and I think we've often done like some mental math acrobatics of trying to take meme coins on Solana and be like, if memes on Solana are this FTV or market cap, they need to be this and that on BTC or on ETH. And similarly, we've been like, if a chain has a $1 billion FTV, then certainly the biggest DeFi protocol on there, or the biggest lending protocol on there, should be at least 20 or 30% of that. But ultimately, that's not how things work. And as much as we like to do those FTV analogies and comparisons, they do not always make sense, especially if it's a new subsegment.
Yeah, I think that's a fair take. Brett, what is your thoughts here on these kind of new categories of apps and protocols, and how do you think about valuation of those?
Yeah, I mean, honestly, it's just how the market thinks about valuation of those things. And Legendary actually just touched into how that's done, right? Like, one, we're in a bull market, so literally everything is skewed upwards. So everyone always has this like, LOL, well, it's also a bull market, so times X or times 10, right? So that's always just there. But on top of it, like this market loves to, this market being crypto, loves to just do the comparative value thing, right? So we always take the thing, squint a little bit, look at the thing next to it. And even if that other thing is a ridiculously overpriced thing, it doesn't matter, because you just say, well, you know, in your personal opinion, then you just go, well, it doesn't matter because that thing over there is worth this, therefore this is worth, you know, X minus 10, whatever, right? We did that with L2s, with, you know, we see Starknet and all these other things having crazy valuations. Legendary just talked about it with meme coins, where you just, even though the original thing is ridiculous, right? WIF at $2.4 billion in FDV, like that's a ridiculous thing. But we go, well, last cycle, you know, Dogecoin got to 70 billion, so not ridiculous. And then we go, well, and then Bitcoin, you know, is a market cap that's 3 times bigger than Solana, or X times bigger than Solana. Therefore, you know, we do that same weird math. So like we're in this value distortion field where we just do comparative value against ridiculous things and kind of stack things that way. And then long time they bleed, but you know, that's kind of how at first blush everything is valued.
Yeah, I love that perspective. I'll share 2 things before we go to Stoop for a final take on this. Something I've been thinking about a lot is how everyone says that NFTs are like a late stage cycle asset. Everyone will rotate to them at some point in time. And I think, well, we've experienced that one time in the history of existence. NFTs have been at late stage cycle asset in a grand total of 1 time. And I would like to see it happen a second time before I think concretely that it would happen a third time and a fourth time and something like that. And in the same way that we say, okay, Doge went to X valuation before, and now we're like, well, okay, well, WIF is going to go to this one now. And it's like, I just don't know. Like, yes, okay, we can go crazy in the bull market. I accept that. I'm just hesitant to think that the way that we go crazy is the exact way that we went crazy before. I think that's like one of the key reflections for me. Stoop, welcome to the stage, my friend. Welcome back. A final take on this valuation question before we get into the main headlines today.
Good morning. Good morning. Happy Wednesday, everybody. I hope everyone does enjoy their day outside of the market, because this is internet funny money. I think we forget that we're playing with monopoly money at times. And, you know, this is an ill-defined market. I don't believe we have discovered proper valuations, like what Brett is saying. And I've always kind of felt this way. But I think in the confusing conversation, sorry, my alarm went off. In like the confusing conversation about trading, that all of our favorite influencers and key leaders would love to talk about. It feels as if we're almost forgetting that, like everyone says, there's so many things happening right now. It's nearly impossible to stay on top of everything. You almost have to self-select. And in my experience, having been here for a while, we always talk about Ponzi-nomics, because I don't believe people have worked out proper tokenomics or economic models of these tokens. I think we've had enough experience, though, to have seen successful tokens and unsuccessful tokens. And as we go around now in this user experience bull cycle that I'm convinced is happening, we really just need to start to really define the value that these tokens and technology can do outside of how much money that we can make, because ROI is irrelevant once you realize that it's internet funny money, right? Like there's nothing concrete that says Bitcoin is worth 60,000, and it's not until we start recognizing why Bitcoin is 60,000 that we can have those more educated and valued conversations.
Yeah, interesting. Fair point to make. Important to kind of keep that in mind, I guess, as we navigate, especially a bull market. Like it becomes very apparent to people that nothing is worth anything in the bear market, but very important useful to keep in mind as well as we go up. Okay, we want to get into the main headlines today. The first main headline of the day is the 3.5 billion restaking protocol, Renzo. It's ETH token, which when you deposit your ETH, you get ezETH back. Began to depeg last night. It's mostly repegged now. The reason for this was mostly, I think, attributed to airdrop dissatisfaction, but I'm going to throw to Legendary here to really give you the breakdown on what Renzo is and what happened with the depeg and why that's important. Legendary.
Yeah, absolutely. On Renzo. So first of all, second largest liquid staking protocol, 1 million ETH staked in there. If you look at it in terms of market share, it's a bit smaller than ETHify. ETHify at around 38%, Renzo at around 33%. And as you said, there's been a depegging incident that happened overnight, at least from a European perspective, overnight. And ezETH went as low as $700 before it very quickly actually recovered. It's almost back to peg. I think last time I checked before the show, it was like 3% off. I wouldn't necessarily say that it's been due to airdrop dissatisfaction. That's certainly a topic that I want to touch on in a bit, but it's mostly also been timing-wise, just because they announced finance launch pool, they announced the TGE being very, very soon, and people probably just wanted to move on since the season 1 of the airdrop is concluding and get their ETH back. However, what happened due to the depegging is obviously that people who were leveraged, whether that was on Pendle, on Gearbox, on Morpholab, or people who were looping. So basically, you use your LRT token, you use something like ezETH as a collateral, borrow ETH against that, convert that back into ezETH, and so on and so forth. Basically, create a leveraged exposure to Renzo. They were liquidated in the process and did obviously suffer a loss. That is it so far in terms of what happened around the depegging. Do you want me to straight go a bit into the airdrop side of things as well, or shall we like stop and pause for a moment here?
Yeah, I think it's helpful to pause there. So just to double tap on. Yeah, I think it's helpful to. Oh, getting some audio feedback. Yeah, that's okay. Can you hear me okay? It's all fine? Yeah. Yeah, let's double tap on what exactly happened. It's obviously fairly technical on some level. Just to reiterate, Legendary, the way that people, what are people doing? What are people trying to achieve when they're like doing this loop? What does it mean to loop? Why are people trying to loop? And what's the benefit?
Yeah, absolutely. So the thing that's going on is that everyone's trying to optimize their airdrop, whether it's Renzo or other L2 protocols. And obviously, the more ETH you have converted into ezETH or into whatever the LRT token of the restaking protocol of your choice is, the more points you will farm. And the hope is obviously the more points you have, the more tokens you get, and the bigger, the larger your airdrop will be. So you either have the option to throw in 500 ETH, or you just don't have 500 ETH. So then you take 50 ETH, deposit that into ezETH, place that somewhere as a collateral on a protocol, like more for Gearbox, whatever. You borrow ETH against that, convert that into ETH. Say you borrow 25 ETH for the sake of simple mathematics, convert that into ezETH again, place that as a collateral, borrow 12.5 ETH, and so on and so forth. And basically, you manage to leverage your position to have more ezETH than you actually had ETH before in the beginning, and just getting a larger slice of the airdrop pie.
Okay, very, very helpful explanation, because ultimately people might not know that when you deposit your ETH in to restake, when you get it to stake, you get given I don't know what you would call it. I guess when you stake your ETH, you get staked ETH, which you can then go and use in other places. But when you restake, you get another token which represents that ETH, which you can go and do other things. So as you say, you can then borrow more ETH. Okay, so that's very helpful. So people are trying to increase their stack as much as possible. Let's get into the tokenomics then a little bit. So yes, these people were increasing their stack. And then what happened? Like, why would they get liquidated in the way that they did? What was the trigger, and what like practically happened?
Yeah, very good question. So what happened is tokenomics got announced, timeline on airdrop, end of season 1, etc. became clear, and people were like, "Yep, I got my points. I'm ready to claim my Renzo airdrop, and I'm happy to put my capital to work into the next restaking solution. So I want to move it out there." And because there was like a higher exodus of ezETH and people wanting to get their ETH back to be ready to farm whatever next airdrop they might have on the list, that caused the DPEG, obviously because of the sell pressure being that high on the DEXs. And that led to, in my example before, I was like saying you deposit 50 ETH, you borrow 25 ETH against that, you have a 50% basically loan to value, if you will. And if suddenly the value for collateral is dropping, and with ezETH, we saw that go down to 800 for a couple brief moments, then the ETH that you had borrowed against your ezETH is suddenly worth more than your collateral, and you get liquidated in that process.
Interesting stuff. Okay, so that's helpful to understand, because obviously, in order for like these tokens that they give you back, there needs to always be, I guess, this deep liquidity for them. So you need to have as much ETH in there as you have ezETH. Brad, your hand is raised. You are also participating in this kind of restaking economy quite a lot. What are your thoughts on the depegging? Have we missed any crucial details that you think is important for listeners to understand?
Yeah, I think I just want to try to like bring clarity to the picture that is this, right? So people give ETH to Renzo. Renzo deposits an eigenlayer for you and gives you a restake token, right? So you have two tokens. One's deposited in eigenlayers, right? They have a lot of infrastructure, eigenpods, and withdrawal periods and validators, right? They're dealing with all the infrastructure. They give you a token to go play with, right? So 1-to-1, always 1-to-1. The problem here that we faced, that Legendary was expanding on a little bit, is that in the DeFi world, right, pools are created, and those pools, usually two-sided, we see them all the time with other meme coins and shit, is ETH to whatever this liquid restaking token is. And because it's always 1-to-1 inside of Eigenlayer, unless there's a huge slashing event, which there was none here, it's always that it should be seen as a relatively safe pool, right? They should have the peg that we've been referring to, which is 1-to-1, 1 ETH to 1 restaked ETH, where they're slightly off, and that's because of like Renzo specifically, right? Whether it's how they're going to operate their eigen shit or whatever, but they should be relatively safe. So you can take loans against stuff, assuming that that peg is going to be maintained, because there's always going to be one ETH backing one RETH or Renzo ezETH that we have here, right? And what happened here was everyone wanted ETH. That does exist. It's in Eigenlayer, right? Renzo just has control of it. They wanted their ETH, and they didn't want to wait to go through like official Renzo withdrawal setups, right? And they said, well, screw it. I don't want to like do the wait period. I don't want to do all this shit. I want ETH for my my ezETH, and they go to the pools, and the pools are finite, right? It's the same thing. We see it everywhere. It's a AMM. So because everyone wanted all of their shit really quickly, and they didn't want to wait to go get their one-to-one pegged ETH out of Renzo, they did it from the pools. The pools then experienced the depeg, even though, right, again, the ETH didn't disappear, didn't die. It's just these pools got lopsided because demand was too heavy. And all of the DeFi products that do LTV, just like we do for NFT shit, right? There's an LTV on your ezETH versus how much you actually took out for them to do those leverage positions. Those things got fucked up because everyone pushed the pools heavy, and that got weird, and it liquidated some people, which what should have been a safe position, because all this stuff is back, which is why the peg was restored so quickly. But it's just a microcosm or a inflection point of where everyone wanted demand really quickly. And it could have been because of some of like the pie chart FUD. I don't know if you guys saw that with Renzo, but yeah. So like it could have been that, could have been just like, yeah, the farm is over, we're moving on. But that like nothing systemically was broken yet, because a lot of Eigenlayer just isn't in place. There's no slashing conditions. There's only like 5 ABSs that are live. Like there's no actual risk there right now. In the future, this could happen again, and it could come from an actual slashing event that happens with one of these ABSs. But that's this is what the fallout would look like.
Okay, so you mentioned the pie chart. We're going to get to that. It was pretty comical in just a little bit, but I guess a helpful follow-up question for people then who would maybe concerned about the restaking economy when they hear things like, oh gosh, like this token has depegged, and then therefore don't want to participate as a consequence of that. Where do you rate this on the scale of risk, Brad, when they see this kind of depeg, they then get concerned about Eigenlayer and restaking more generally? Like, to what extent is this something people should be concerned about when they restake, either directly to Eigenlayer or via one of these restaking protocols?
So risk is always going to come based on the risk that you take, right?
Sure.
Like you can remove any scenario here, and what we're talking about is people in leverage positions that got, right? And that happens across all markets, especially in a volatile class like this, right? People play with leverage and they get got. So like always know what the potential outcome is whenever you start playing with leverage, regardless of if it's restaking or NFT or meme coin trading or whatever. And then talking about like Eigenlayer specifically and like the propensity for this to actually happen in the future, I absolutely think it's going to happen. I don't think it'll be on a major, like it won't be on an EtherFi or a Swell or whatever, but I can almost guarantee you that there will be some boutique restaking protocols that spin up that say we're just going to opt into a shit ton of additional slashing conditions because it means more yield for us, like degen restaking effectively. And then you're going to have something like this, like something's going to go sideways. There's going to be a slashing event. Now, like we don't know like the timeline for that, but I think just as humans, it's pretty, especially if it's humans leading into a bull market, of course it's going to happen. The scale is going to be hard to predict.
Interesting. Okay, look, I think that was very helpful in kind of placing the risk and kind of teasing out that this is, if I understand correctly, just for one more confirmation, but this is more to do with the leverage that people are like playing with in this restaking ecosystem rather than the restaking itself. Is that fair?
Right. Yeah, if you had ezETH, your ezETH is always redeemable for 1 ETH, at least now while slashing conditions are 0, right? Like there's no risk there. There's never been risk. It's just timing sucks. For the people that are eager to get out, or people in leverage positions, those people lost some because yes, timing was unfortunate for those people.
Got it. Okay. That is very, very helpful. I think we've dealt with that very sufficiently. There's just one additional element to that, Stoop. I see with your hand raised. We'll come to you in a bit though, because I just want to update people on the next element of the story, which is to do with the pie chart. Legendary, do you want to take this and explain what happened? Because as you know, as it relates to all our previous conversation on the importance of tokenomics and how to value things, I think is very important to be able to look at this. And I've got the chart available as well to share as you speak for people watching in on YouTube and X.
Yeah, absolutely. That is on the airdrop side of things. Maybe before we go to the chart, let's set it up a bit to understand how the airdrop is set up to work. Renzo had allocated 10% of the Renzo token for the airdrop, with season 1 receiving 5% of that, and the other 5% being kept in the future with little allocation, 2% of those 5% going to NFT holders like Milady's, with Binance coming out. Actually, that's an interesting side topic of that, quite strongly, by receiving 2.5% for people who are farming Renzo or will farm Renzo on the Binance launch pool. However, the main issue from the chart gate, if you want to call it like that, is the sizes of the pie in the official chart that Renzo has posted don't make any sense at all. You have launch pool and liquidity being 2.5% each, and basically they are the same size, those two pies together, than the 13.44 allocation for the Renzo Foundation. So kind of make it look like the community, just by looking at the size of the pie, is getting the same amount as the foundation is keeping. Renzo did go on to delete that post later, and obviously there's a more accurate representation of that where the pies make sense.
I think they got the second pie wrong
part of
as
the
well.
criticism also is, sorry, I can't hear you.
Sorry.
When
It's okay.
yeah.
It's okay.
The part of the criticism also is that when Binance is now starting to have Renzo as their launch pool partner, basically people get to claim the token earlier. They only need to farm for a certain period of time, for a couple of days, whereas people have been farming for months and months. And 2.5% of the total allocation goes to the Binance launch pool, 5% goes to Renzo airdrop, which basically means that the airdrop is only twice the size compared to those Binance whales who will farm there. Also interesting to me from the perspective that we've been talking about BNB, and we've been talking about like that nobody's talking about the token, about BNB or about using Binance. But the deals obviously that this exchange is getting, I think it's also important to like remember that they got in, I think, a 25 mil or 30 mil to invest in Renzo, pretty insane. And if you look at basically the entire airdrop versus the Binance launch pool allocation, that's outrageously good, an outrageously good deal that Binance got, but obviously something that pisses off some of the Renzo core users or early supporters.
Yeah, I think that's fair to me. And I think, look, that Binance additional detail is very, very interesting. And you were making a very interesting point offline that, again, when we think about how people's attention is spread, these Binance launch pools seem to get a really good deal often. I'm kind of thinking about how to try to participate in that stuff, because they seem to be getting a lot of good deals. But the bigger thing to me was just how outrageous this chart looks. So you mentioned the two portions of 2.5%, which are visually presented as being the same as like 13%, and which is obviously not how much they're worth. But then also, as the people who are watching in can see, you've got two segments of this pie chart which read 30% and 31.5%, which have clearly been like contracted to be like half of the pie chart. So basically none of these numbers, like just none of them make any sense. And it's like it's a willful attempt to try to manufacture your reading of the situation or to play with your perception of the numbers. Like it makes completely no sense to ask something like, imagine the boss of a protocol telling someone else like, okay, guys, what we need you to do, we need you to do the pie chart. And if anyone was going to do that honestly, they would just do the pie chart. It's not a complicated thing to do. The proportions take care of themselves. But it would require an additional instruction to say, do you know what? Instead of making 60% of the chart read like 60% of the chart, make it read like 50%. Instead of making 2.5% of the chart reading like 2.5% chart, make it read like 6% or 7%. So very, very odd decision making here when it comes to trying to launch, which is a shame because my understanding is as you said, I think the second biggest protocol just fumbling the bag when it comes to this final moment. And I don't know necessarily that there'll be a material impact as a consequence of this. But it is a bit strange. Obviously, the DPEG was caused immediately. It seems to have been kind of that situation seems to be rectified because of, as Brett explained, like the ETH is there. It's just people were trying to rush out of it. But we'll have to see how things progress on that in that respect. Sammy, I think you had a perspective here, and then Stoop wanted to come in.
Yeah, I think I mean, just to me, people are still living in that fear, that PTSD from Terra. So people have been around the block once or twice before by this point. And I think when you see something that, can you hear me okay?
Yeah, it's good.
Yeah. I think when you kind of see the cascading effects of that demand to try and sell the ezETH for ETH over the counter or whatever, I think that cascading pair, it can be exacerbated by that looks like intentionally deceitful. I don't know whether it was. I don't know whether it was like a pure mistake where no one reviewed that pie chart. But if you've got a potential DPEG cascading down 75% of the value of what ETH should be pegged at, I think anyone who was here for May 2022 would have probably thought, "Oh shit, let's get out as soon as we can." It's just like the fact that it bounced back, I think, is testament to the fact that it is it's protocol as opposed to like a deceitful individual. Like if you look at the time it's taken for FTX to sort out that litigation process, it's taken years, whereas this is literally flushed out the leverage, all of a sudden it's rebounded, and you're kind of getting back to almost parity. I know it's trading at like a 3% discount, but that's largely due to the fact that it takes roughly about a month to redeem that from EigenLayer. So the people are basically trading on that, saying, okay, would I rather have 90% of my ETH back, 97% of my ETH back now, and use that for something else, or would I just leave it in there for that 3% accrual, like Brett said, to get that one-to-one parity redemption, because no slashing things at the moment. So it's interesting to see the market play out. I think it's hard to say whether something like this is going to happen again for another reason, but based on my knowledge of the protocol and how it all works, it seems to have done its job. It's flushed out the leverage and it's kind of gone back to parity, more or less. And I hope that's not like a touch wood moment where something else happens. But yeah, I've got ETH in ezETH. Maybe I might redeem it because I do think the opportunity cost of getting 3% return on my ETH over the next month doing other airdrop farming probably makes sense for me personally. But I think other people would happily leave a sizable amount of ETH in there just to accrue that back to parity over the next month or so.
Okay. I think that's pretty fair. Interesting take. Stoop, give us a final take here because we need to move on. Is it something to be concerned about, or is it fine and we can move on?
I would just say I feel like we've seen this play out before. It's obviously not going to be the same because we learned from our mistakes. But like BitConnect and what was it, 3 Hours Capital, and who was it, Do Kwon, that became like a criminal. Like we've seen stables, and I think we're still watching experiments play out. Personally, I don't mind it as long as people understand the risk. My problem, and this is across the board, is that nobody's actually bullish on anything. Everyone is just looking for number go up, and without any like actual conviction, without being able to actually back up, I can't understand why I should use this versus Blast. And I don't have unlimited ETH. So I can only choose 1 or 2, maybe, or do I just put some money into Sol, or do I play around with runes? I do believe that ETH will be like essentially a better savings account as long as these protocols are implemented correctly. But I know you guys are talking about this. I know I've also heard of Mega ETH. Have you guys heard about that? I guess it's raised quite a bit in like the VC circles and is really going for a big raise and launching a nice L2 as well. Like, is everyone just going to be locked into Egan and Blast and not be prepared for any other L2s that also come out? And I think that that's the more important questions, that we remember the holistic view of the whole market, because Spaces hosts and shows like to think so narrowly on like gambling or trading or NFTs, that we're missing like the bigger point. And I haven't really heard anyone talking about how DGen holders over on Warpcast have like 3x in 25 days. But everyone, is talking about runes failing, and now this stables coin on ETH is having a run, which I think we saw happen with FTX and other things, because sell pressure increases over time. It's just a natural thing around entropy.
Yeah, I think we've touched on various things. We deal with the things which are the headlines of the day, and but yeah, I think you made some reasonable points there. It's I think, well, the one thing I would say, I think Blast, Farcaster, like they're quite different things to restaking, but to your point about understanding the risks, yes, restaking is something which is quite complicated, and people definitely need to try to understand that in the best way possible. I have read.
I also
go on, Sammy.
I also think the materiality side of things, like if you got a 3.5 billion protocol that's had a pretty sizable swing down in, like it's pegging from ezETH to ETH, it's like that's pretty significant. I think the stuff that's happening on Farcaster with DGen is very interesting. Like they're building out a layer 3 on base, I think, and it's like there's a lot of stuff going on there. There's a lot of innovation, but I think specifically today, like that could potentially be something that's, well, people are going to be concerned about it, because if you've got 3.5 billion locked up, that's a lot of people that have a lot of exposure to that specific protocol. So I think, for me personally, I think this is probably the biggest thing of the day. But it's not to say that tomorrow or later in the week, like DGen could do something really interesting, but with their protocol.
Yeah, for sure. I agree. Let's get on. I think we've dealt with that fairly sufficiently. We want to do a quick roundup from the snapshot to get up to speed with everything else that's been happening in the space in the last 24 hours. And then we want to hit, I think I'm going to let Legendary go for one of the final headlines. We'll give some hot takes on the final headlines, which we haven't had a chance to discuss in as much detail. But as always, the roundup is from the snapshot. It is pinned up top. Number one, Eigenlayer for ETH restaking surpasses 15 billion now in TVL. That is an absolute juggernaut. Number two, Philippines SEC orders Apple and Google to remove Binance from app stores. People really going after Binance just all the time, it seems. Polymarket intern sacked after Retardio tweet, but also sent 300K. This is a strange story where the Polymarket intern seemed to have got sacked, but then someone sent them $300,000 as a consequence of being sacked. I don't really know what's going on there, but crypto Twitter seemed to be very entertained, so I thought it would be useful to bring up. Next, Paraguay presents bill to legalize and recognize Bitcoin as legal tender. Always on the lookout for more countries and sovereign nations that are trying to incorporate Bitcoin in any way. Next, Popcat rises 100% in a day, and Maneki hits $110 million on first day of trading. Louis Vuitton craft exclusive $7,900 jacket designed by Pharrell Williams for their NFT holders. And finally, Jupiter announces mobile initiative beta for May. One-click, zero-fee trading. The Jupiter mobile initiative will onboard tens of million users, is beginning. That's what they are seeking to do, at least. Legendary, that is the Web3 roundup. We've touched on a variety of things there. We had two other headlines which we didn't really get a chance to speak about today because we spent a significant amount of time discussing valuations and tokens and getting into the technicalities of what is I think going to be a very big deal moving forward, understanding how the restaking tokens interact with each other. But we've also got Chromie Squiggles, the 16 times sweep, that floor moving back up to 7.2 ETH after a long time ranging beneath 5 ETH. And the SocialFi app, Fantasy Top on Blast, reaching $30 million TVL, which is clearly a significant amount of dollars. Got just about a minute, Legendary. Where do you want to take this? What's your quick takes on one or both of those things?
Yeah, unsurprisingly, I'm going to talk about art. I'm not going to talk about the squiggles, but going to go to Fantasy Top.
Okay.
I think I have 2 points to make on this.
Okay.
First of all, everyone is sharing that, yes, they have received the second highest gold distribution, and it's such a good gold farm. This is the part where I disagree with. as you said, there's already 30 mil deposited in that. That's going to be massively, massively overfarmed now that everyone is talking about it. Yes, you might still get a good amount of gold, but it's certainly far from being the best gold farm on Blast. However, and that's also a point that Cyrus made, the more interesting side of this to me is that if you trade this right, like you were able to trade Friendtech in the early days, there is a very good chance for smaller accounts who start with a couple of ETH and basically make smart bets on the popularity of influencers, which is essentially what this fantasy top app is about, have a good chance to increase their stack significantly. So I think this aspect, the trading side of things, the speculating side of things, is potentially the more lucrative one than thinking about it as the best gold farm just because they have a high or large allocation of gold.
I was actually thinking something very similar yesterday when all of this announcement came out and all the hype was circulating around. So I'm glad you made that point. Guys, we've run out of time for today's show. Apologies, we didn't get to hit every single headline in the way that we would have liked, but I hope it was a helpful deep dive into some of the more important things happening in the last 24 hours. So as always, thank you so much for joining. Thank you to my legendary co-host, Legendary, and Sammy. Thank you to our other contributors, Bread, Funky, Oxy, and Kusho. And thank you so much for joining us in the audience. We'll be back again with you tomorrow. We do this live every day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. GMT. We will be back tomorrow. Have a wonderful Wednesday. Take care and goodbye.